Hey guys, Code Invest here. Haven't made a video in a while, so I just got this app set up so I can start sharing my work posts with you guys on a weekly basis. So we'll just go over a trading education post that I did today. So this is on the Top One Markets app. So you can download the Top One Markets app in the App Store. Just search for Top One Markets. Make an account with email and you can join the community. So you just click on community, and so this is just a post on the so this is an article I wrote on the simple moving average 4 and 20. So I'll just kind of, I won't read the whole thing. If you're interested in reading the whole article, just you can download the app and find the article. You can find me, and then you can have access to the whole article. So I'll just kind of summarize it. And also these videos are going to be coming back again, so I apologize for the delay. I wanted to get this app set up, like a recording app set up, so I finally did. Cleared up space, so hopefully you guys like it. So the post was on the 4 and 20 simple moving averages. So it's just basically like one way to use the simple moving averages. So basically I just talked about what a simple moving average is. So what is a simple moving average? A simple moving average is the average of a price. So it's the average price of an asset over a certain period of time. So often the average will be calculated by a certain period, such as 20 days, which is the simple moving average 20 or SMA 20. And so it's calculated by using the last 20 days, the closing price. So the formula works like the first day closing price plus the second day closing price plus the third day's closing price, fourth day, fifth day, sixth day, all the way up to the 20th day. You add them all up and you divide it by 20. That gives you the average price, and then that line is plotted then on your screen, and that's what the moving average is. So that's all that. So then how can the SMA 20 and SMA 4 help us in our trading? So these simple moving averages can help us in a few different ways. So in this post I only mentioned one of them. Well, I'm sure there's more than two, but it seems to be there mainly is, well, most people just use them in the crossing way, like when one crosses over the other. That can be helpful, but this is different, so I didn't talk about that. I just talked about what I kind of think of as the distance away method. So the distance away method shows that the price has drifted very far away from the, for example, SMA 20. So if let's say you're just looking at like Bitcoin, or in this case it's oil. Excuse me. So the chart ticker is XDI USD. That should be US oil against the US dollar. So I just talk about it basically viewing the SMA 20 on the monthly chart of US oil. And then from the picture that I'll show you in a sec, you can see that over the last many years, the price has drifted far away from the simple moving average 20 and then retraced back to the simple moving average 20 in the future. So I just kind of think I've kind of discussed it as I discuss it kind of like as a sticky line, like it goes up and it kind of sticks back to it later on. So it's similar to the median or the middle band of the Keltner and Bollinger Band channel. Actually, I believe at least the Bollinger Band is based on a 20 SMA. The Keltner might be too. We'll talk about that later in another video. But at this point, in regards to US oil, we can see that price is pretty far away from this line. This is the SMA 20. So it's very high above the SMA 20. That could potentially indicate that price may be wanting to go short in the future. This and then some problems that kind of occur with the distance away method. So the problems that can occur with the distance away method is that you can sometimes get stuck in a long bullish or bearish trend, for example, for extended periods of time, like when you think it's okay, so it's this far away, and you think that it's going to retrace back to the line, but it continues down for a while. So in this article, I talked about a way to overcome that is kind of the way I think of it is to approach zero. So you can approach zero by using the SMA 4. We can approach. So we were talking about the SMA 20. And now I'm talking about the SMA 4. So we can add another simple moving average, which is the SMA 4, and we can approach or try to zoom and derive closer into the asset by approaching zero. This works in a way such that the 20 SMA is closer to positive infinity than 4 is, and 4 is closer to negative infinity or negative infinity plus 1. Thus we are approaching zero. We can think of the price or the SMA 1 as zero. If the SMA 1 and the price is zero, then from the 20 SMA we can approach zero by using the SMA 4 together, because 4 is closer to 0 than 20. And then now we can see that if the price spikes very high above the SMA 4 line, the SMA 4 is helping us show shorter period trades. So for example, once it's already over the 20, and now it's high over the 4, now that we can see that it's high over the 4, that it gives us a better window to look for a short opportunity. Basically, that's all that's the rest of it saying. So I have a little picture here, like a chart. So the top says price spikes high above the SMA 4 and retraces back to the SMA 4. So here's some examples. That's XGI USD on the monthly chart. So you can see that price spiked high above the SMA 4, that first long arrow. So the white line's at the SMA 20 and the yellow line's the SMA 4. So you can see that it spiked high above the SMA 4. And I guess the 20, not super high above the 20, but it's high above both. And you can see that the price retraced back to the yellow line. It does that over and over again. So that's what I'm trying to show you guys. So like recently you can see that price, I talked about it in another post, so you guys can check that out. I won't have time to upload them all, but I'm going to try to start doing these frequently now. So you can see that this month, or let's look at the last month. You can see that the price rose high above the SMA 4. It was very high above the SMA 20. Obviously with the war and stuff, and the inflation's been causing the oil price to rise because of fear and whatnot, and it's just been running bull. So you can see that we did spike up, and then upon the next candle open this month of June, that we went down about like $10. So you can see there's a short opportunity there. And then also talk about, I do an example about the SMA 20, that price falls far below the SMA 20 and retraces back to the SMA 20 in the future. So you can see that it dumped there and then eventually retraced back. So yeah, hopefully that can help you guys in the right direction. Just some more of my recent calls. The US oil short. Is at 118 and it came down. I had to take the dates off because they don't want the TradingView symbol on their app. There was the US oil, a little bit of a short. Some fundamental stuff. Oh yeah, there's a lot of fundamental stuff I do. as well sometimes, so you guys can check that out. There was a DXY short that I mentioned. That was kind of like the third week into it. A little bit of a Bitcoin, not now, but there's a little bit of a retrace of that median line. So we'll get into all this pretty soon. We had that, and then we had the NASDAQ 100 retrace. A little bit. So as soon as I post something from now on, I'll try to make a video about it. At least once a week, we can go over everything that I do and the like how the market, the current conditions and stuff. So I usually do those on Sunday. I do technical analysis of 2 assets on Sunday. Friday or Thursday I do a market note, and then Tuesday and Wednesday I do a trading education. So you guys can check that out. At least once a week from now on, I'll summarize everything. So this is from like the last few weeks. So it goes, if you guys want to check them all out, there's a lot of good stuff. And yeah, so we'll continue this discussion next time. Once again, once you get high, just to touch on this to help you guys out. Once you kind of get high above those shorter moving averages, you're gonna need some kind of momentum oscillator, perhaps like MACD or stochastics. So you're gonna be looking for those crossover signals or any other signals you can get, so that can help you kind of when it's high above. So we'll talk about that later. So I'll see you guys next time, and take care.